thing. One sign that maybe there is a problem. Why? Because company earned less than before. And then you compare with its competitors, with its own history, and also the notes. So every manager, a CEO, they when annual reports are published, they write down a note, which means the future perspective or company's note, company performance note. You see that those notes or their interviews, you find out that what will happen this year. So are we clear how the income statement are made and what it shows?
Yes, it's clear.
Good. Now the retained earnings. So retained earnings statement, it shows what a company did with its net income, whether it distributed or whether it retained in the business, or if it distributed, then how much it distributed and how much it retained. So it shows the portion of net income reinvested in the business, kept in the business, not distributed. So net income increases the retained earning, right? Because the formula is net income minus dividend is equal to your retained earning. This year, if you want to find out the complete, then you add opening retained earning. So you see, if you earn more, retained earning would be more, right? So loss or dividend decreases. Also, net loss or dividends, it decreases the retained earning. If you have a loss or if you distribute more, then what happened? Your retained earning would be low, decreased, right? So net income flows from income statement to retained earning. So how you make retained earning? After making income statement. So corporations not obliged to pay dividend. Remember this one, it's not necessary to pay dividends, right? In order to pay dividend, you need to go through AGM, annual general meeting, in which the shareholders, they decide that how much dividend, whether full dividend, whether half dividend, what should be the payout ratio. It would be decided in annual general meeting. So this is the topic of introduction to business. I hope you will learn over there, or you already learned. So this is the gap and corporation retained earnings, January 28, 2020.
Sir, I
Right?
have a
Yes?
what does opening retained earning means? Like, what is different from just ordinary retained earnings? What's the difference?
Not ordinary. Opening.
Yeah, I mean, so what's the difference between opening retained earnings and just retaining earnings?
Okay. I will explain after this, explaining this retained earnings, the statement here. Here. So you see, so this is the retained earnings for 2 years ending January 28, 2012. Right? Remember, 2 years. Normally we make 1 year retained earning. So you see here, so I'm coming to your point, Junpyo. So in 2010, up till 2010, how much earnings are retained? 10,815. And in 2011, your net income was 1,204, and you declare dividend 252. So that would be your total retained earning by the end of 2011. Now let's coming to the retained earning in 2012. How much money you have saved by not distributing the earnings till 2012. And how you can find out that? All the retained earnings that you kept within the business from 2011 plus 2012 earning minus 2012 dividend, right? So this 12,364 would be the retained earnings till 2012. So this much amount the business didn't distribute it to its owners, which are shareholders. So this amount belongs to shareholder, and we call that this is the owner's equity, a part of owner's equity. So Junpyo, so the difference between opening retained earning and ending retained earning is that opening retained earning shows how much how much retained earning you kept before the start of the year. So this year is 2012, right? So for its opening retained earning would be retained earning in 2011. So
Okay. So just the retained earnings like the year before, right?
yeah,
Okay.
so for in order to find out how much retained earnings are till 2012, you need to find out first the opening retained earning or all the retained earnings that are before 2000 till 2011. You found out here, right? And how much the total retained earnings in 2012, you find out how much the company earned during the year and how much it paid or shared its profit to the owners. Left amount would be 2012 retained earning, and this is the total retained earning that you didn't distribute it from previous years. So some students they confuse that. So this amount is 2012 amount. No, this amount is coming. It's like carry forward. It is addition from previous years, not this year. Understand? So ending retained earnings shows you how much from previous years till now, this date, you did not share the complete profit, how much you kept the profit within the business. Or in accounting term, we use the word how much you reinvested your earnings from previous year, right? Everything is clear? Sipide, Arane,
Yes, yes, it's clear.
Joanne, Jordan, Junpyo,
Yeah, it's clear. Yeah.
Minsu, Miss Ping Ping,
Yes.
right?
Yeah, more or less.
Well done. Let's talk about the balance sheet. So balance sheet, it measures financial position. Like I told you in that slide in which you talk about all this combined. So it measures the financial position of a company at a specific date. So it is also called the statement of financial position, and it reports three items. What is the formula for balance sheet? Assets is equal to liabilities plus owners equity, right? So remember, balance sheet, it dated at the moment in time or a snapshot or a picture on a specific date, right? It shows you the financial position of a company at a specific date or a moment in time. That it doesn't show what will happen during the year or what happened during the year. Okay?
So wait, so an income statement, it pretty much shows the period of time, say from like 2010 to 2011, right?
Shows
And
if you see the income statement, how much you sell during the year. For example, the value here, for example, 1 million. You didn't sell on one day 1 million sales, right? Of course, it takes some time, right? Revenue minus expenses. Expenses, all the expenses. Like you didn't pay rent on just one day. You pay rent the 12 months one by one, or your salaries one by one, or different kind of utility expenses one by one. So that net income that will came, it shows you how much you earned during the year. So that's why the income statement shows you the performance during the year. The focus on the income statement is during the year. But the focus of this balance sheet is what is the position of the company at a specific date. For example, assets are 10,000, 5,000 plus 5,000. So this 10,000 assets are, for example, on 15th of September. So the position of the company on 15th of September is that its assets are of 10,000. Maybe on 20th of September, it becomes 12,000. Maybe at the end of the year, 31st December, it becomes 120,000, right? So the balance sheet only tell you the snapshot or a picture or a moment in time position at a specific date. That's it.
Sorry, I have a question.
Yes, sure.
When we are calculating the assets in the liabilities, you said it's like a snapshot, as you said. Then for the liabilities, are we going to calculate those that we have already paid, or for example, the tax that we have to pay later?
That is, right now, it's an advanced question. It's not that I don't, right now I don't want to answer this question because it's a very initial step. Your question is a little bit advanced, but just to give you a taste here. In balance sheet, it shows you the position of the company, right? And you see, if it is 120,000, of course, this will become more. For example, this is 20,000 and it becomes 100,000. So it's not about that you are going to increase your assets and you are not balancing your liabilities and on equity.